Hello everyone, Mark Marino here again with some interesting real estate info for you. Yes, it will be interesting, so keep watching, please. The topic this time, how do I get into a home with as little money down as possible? Now that's a question I get from buyers all the time. There's a couple of ways to do this. Strategies I like to call the low down home. You know, that low down home thing looked a lot better on paper. Now that I hear myself say it, maybe I need to rethink that line. Anyway, there are a couple of ways to accomplish this. The first option is to buy a home using an FHA loan. With a loan from the Federal Housing Administration, it's possible for you to get into a home with as little as 3.5% down. Now, what you may or may not know about the FHA is they don't actually loan money. They insure loans that are made by FHA approved lenders, and those lenders also set the rates for the loans. But the 3.5% down opens the possibilities for a lot of buyers. But as the saying goes, the best things in life may be free, but the second best things can be expensive. Which brings me to PMI. Private mortgage insurance has been around a long time, since the late 1800s, and it is what it says it is. It's insurance on the mortgage paid by the borrower. Basically, if you buy a home with less than 20% down, you have to pay PMI, and the rates can vary. They range from anywhere from 1/3 to 1.25% of the loan balance, and that's something that's paid monthly. During the housing and banking meltdown 10 years ago, we didn't hear a lot about PMI, as lenders were offering loan products that were, well, we know how that all turned out. FHA loans are subject to PMI, and FHA loans also add an upfront mortgage premium that is about 1.75%. Now that payment can be folded into the loan, so you really don't see it, but after that, the monthly PMI kicks in. Now, depending on the price point of your home, this could add up to a few $100s per month on top of the mortgage that you're paying. And that can make the difference between moving forward with a home purchase or not. That said, just like interest on your loan, PMI payments are tax deductible to a point. Homeowners who pay PMI can deduct those premiums on their tax returns thanks to legislation called the Protecting Americans from Tax Hikes Act of 2015. That really trips off your tongue, doesn't it? The limits for homeowners with an adjustable gross income of more than $100,000, the deduction is reduced. And once you exceed $109,000, the deduction goes away entirely. Now, please keep in mind, Mark pays taxes, but Mark is not H&R Block. So please consult a tax expert for your own purposes. So with an FHA loan, there's that trade-off of a low down payment to get into a home for a monthly payment that will be higher than if you came in with 20% down or more. So that's the choice. But there's another way to buy a home without 20% down. Option number 2 involves a little more cash up front, but no monthly PMI. It's called the 80-10-10 loan. Now the way this works is you get a loan, a first mortgage for 80%. Then you get a second mortgage for 10% of the purchase price. And the remaining 10% is cash that comes from you. So when you combine your cash with the second mortgage, you're at 20%, and the PMI requirement disappears. Now that can save you thousands of dollars per year in mortgage insurance premiums. This is a great loan product, and clients of mine have used it in the past. Not every lender offers it. I don't really know why, but I do have a terrific lender that does, and I can set you up with them very easily. So that's the 2 ways to get into a home with a low down payment. Each offers its own trade-offs. As you probably know, interest rates are still very, very low. So if you've been toying around with the idea of buying, it might be a good time to look into your options. So that's it. Thanks again for taking the time to watch my video. As always, if you have any questions about what I'm talking about here or anything else, please feel free to get a hold of me at your convenience, and I'd be happy to spend some time talking with you. Now, in my next video, I'm going to tell you about some very interesting strategy for those who may be close to retiring, who want to scale down their home to something smaller. Basically, it goes like this. You can sell your current home, take the low property taxes you have now with you, and then pay no monthly loan payment for the rest of your life. It's a slight twist on the reverse mortgage, which has been around a long time, and it's an option that is getting more and more popular for those at or near retirement. So I thank you again. Take care, and I look forward to speaking with you soon.